Now demand globally is going down. I mean, the biggest joke in the world is that China says they're growing at 7%. This is not the case. There's no way iron ore would be down 80%, and oil and coal down 70% if China was growing at 7%, because they're the largest consumer of commodities, both their consumers and their industrial machine. China is probably growing at 3 to 4%. China has overbuilt everything: condos, houses, roads, infrastructures, industrial capacity, 10, 12 years out. They've moved 500 million people in the last 25 years to cities, and half of that in the last 12 years. They've got 220 million unregistered citizens with no skills in cities, and now that they're produce something for nothing economy, I mean, they're building stuff for nobody, is starting to collapse. This is going to be a huge problem. So we've overexpanded, too much supply. Now global demand goes down, led by China, also generated by falling demographic trends in the whole developed world. And China's collapse kills emerging countries where there are good demographics. And so you have this commodity collapse, and it's going to continue. And you're right. Our biggest thing is hey, emerging countries around the world are already hurting from this collapse. And then, like you say, prices falling below production costs. Look in the United States and Canada, the frackers are going to get killed. They're $65 on average cost, and oil is sitting at 38, 40 bucks recently, and it's going to go to 10 to 20 before it's over. They're going to have to default on their debt. They're producing now because their short-term variable costs are maybe $15 to $20, but their long-term costs are between $50 and $80, and they are losing money, and they're going to default on over $300 billion in debt, and that's going to be the beginning of our next kind of debt crisis in the United States. That's our next subprime crisis. So that's how commodities affect us, even though outside of oil and fracking, we're not major commodity exporters as a general rule. But think what this is going to do to Venezuela and Russia and Iran and even Saudi Arabia. Saudi Arabia is at $7 cost. So Saudi Arabia is losing money on their government side, but they are still make money on the business side, and they want the frackers to go under. They want 4 or 5 million barrels of oil a day to disappear in the United States so that supply comes back down and they have more market share. So Saudi Arabia is pumping when they shouldn't, but they're doing like Rockefeller in the early 1900s, where they're saying, look, we're the lowest cost producer. We want to wipe out our competition.
Now, if I'm in power or even a central planner, you look at what you've just pointed out, and obviously a collapse like this will be devastating to government revenues, and the debt will be just crazy. So I would imagine their response, and I mean, please expand on why isn't the Fed going to just overwhelm the system with helicopter money?
I think that, I've been saying this year, I don't think we're going to see a rate hike. Everybody's debating, is the rate hike going to be September or December, and all this ridiculous, stupid stuff, like a quarter of a point will make a big difference. I haven't seen a rate hike. We felt that markets would be down and economies would be slowing in the second half of 2015. And I would not be surprised if by the end of the year, the Fed turns around, not only doesn't do a rate hike, but starts saying, oh, we may need to do QE4. My problem is, hey, they did this last time. They're always behind. The government reacts to trends. They don't create trends, they react. Consumers really drive trends. We can predict consumers, and businesses respond to them, and then the government responds to everything else. They probably will do QE4, but it'll be too late. It takes time for money to move into the economy. It takes time for the Fed to change their mind and look like idiots and say, oops, we were wrong. We thought the economy was being strong and it's weak. By the time they react, it'll probably be too late. And because, again, the Fed is printing money to fight deflation. That's why we don't have inflation. The trend is deflation, deleveraging of massive financial asset bubbles, stocks, commodities, real estate, everything, and debt, massive amounts of debt that have to be delevered. Money disappears when you deleverage those loans and financial assets. It disappears. Like $100 trillion out of 230 around the world could disappear in the next few years. That's why you get deflation, less money chasing the same goods. And so they're just inflating to fight deflation. I think the deflation is going to get the upper hand especially this time around. So that I think they're going to be too late. But I think, yeah, you'll be hearing about QE4 probably pretty soon.
Harry, on the millennials, are they changing your guys' models because they're getting married later, they're not finding work out of college, having fewer kids, and from what you guys are forecasting, they're really going to be a generation that will probably be completely devastated by what's to come in the next 5 years?
Yeah, they are. You look at history, generations, their whole personality and view of life gets formed as they're entering the workforce, which they are now. About half of them have entered, half of them haven't. And yeah, they're seeing real estate go down for the first time since the post-World War II economy. They're seeing difficult jobs. They're seeing deflation instead of inflation. They're going to have a whole different view than the baby boomers. They're going to be more conservative, like the generation before the baby boomers, the Bob Hope generation that basically were coming of age in the Great Depression and World War II. They are getting married later. They're skeptical. They're worried about having kids in a difficult world, and they don't think like, oh my gosh, the way to get rich is just buy real estate and sit on it. So they're not buying homes. They're renting, and they want to be more flexible in case a better job opens up in Denver than Dallas or wherever they're at. So they're going to be a more of a renter generation and already have been. So. And I'm just getting ready to get some updates. Every 10 years, we go through and go more in depth into the consumer expenditure surveys from the Bureau of Labor and get like 10 years of data so we can really zone in. And I'm about to get an update, and I'm almost sure it's going to show, yeah, these people are doing everything later.
Harry, I was a Southern California resident. I'm now in Texas, but in Southern California, the middle class, it's quite an illusion, and I just wanted to get your thoughts because I talked to friends who I grew up with, and these people make decent money. I mean, they're making six figures. They're college educated, usually two income families, but their mortgage payments are about $3,000 a month. They got $1,500 in student loans, and it's almost like, yeah, you're middle class. I guess as you look middle class, and because of technology, you got a good quality of life. But my goodness, it's almost like is the middle class in the U.S. experiencing some severe dysfunction where they look middle class, they act middle class, but really they're in debt to their eyeballs.
Yeah, they're in debt. They don't have a lot of discretionary income because their mortgage costs and, like you say, their student loans are so high. There's no question. I mean, in California, that's different in Texas. Where the cost of living is more affordable. $100,000 salary would be middle class because of what it costs to live there. And I was in California till 2002, and I got out of Dodge, man. The taxes, the state income tax has been raised on the marginal level, which I always paid, up to 14% from 9.7. Sales tax is like 8 to 9%. And the cost of housing, even after the correction we had in the last downturn, is at new highs in most cities. LA or San Francisco or whatever, or San Diego. It's crazy. I mean, I'm in Florida with the savings in just the state income tax. I could buy a second home in California on the savings. Why would I ever put myself as a resident of California again? And I never would. I love California, but I wouldn't even think of being a resident of California with the cost.
Oh, I agree. Yeah, I have three young children, 1, 3, and 5, and we wanted to buy a nice home that we would raise them in for the next 2 decades. And when homes near $1 million in California, don't even have central air and they're 1,200 square feet. That was when it's like I'm throwing in the towel. I'm going to a no income tax state where life is a lot better. On immigration, so it's a really big issue right now in the U.S. This election might even be about immigration if Trump continues his advance, which we're still 18 months out. But what I want to ask you, because you are the demographic expert, has government policy of letting basically we're just I don't want to say being flooded, but there's a lot of people from Central and South America coming to the U.S. Does that help or hurt U.S. long term since the millennials aren't having as many children?
Oh yeah, I tell you that from a demographic point, culturally, I can see people arguing how immigrants change our culture, and hey, I can see that being the reason, but demographically, it's crystal clear. This helps. Most developed countries are not having enough babies to replace themselves, Only the countries that have high immigration, in Australia and Canada and Switzerland, have higher relative immigration than we do, and higher quality, more educated and all that sort of stuff. These are the only countries that have decent demographics at all going forward. You get Southern Europe and Germany and Austria and Japan and East Asia, Taiwan and South Korea, where they're having even lower birth rates than us and no immigration. They're dying. They are going to see their workforces shrink 30, 40, 50% over the next several decades. So immigrants, they have more kids and they come in younger, ready to work. The best thing we could do is be more selective, like Australia and Canada, where